Hi, folks. Today is Thursday, November the 21st, 2019. And as I mentioned a couple of days ago, I guess Wednesday, yesterday, we do have a couple of trades in our model portfolio that we need to do some adjustments to. Of course, we need to roll out our VIX position once again, which we will continue to do. This VIX position is sort of our counterbalance, if you will, to everything else in the trade. We used it as an insurance protection. We had an insurance kicker in there. We haven't bought that in the last couple of rolls simply because of the cost to do that was a little bit too high. The insurance premiums, if you will, were a little bit too expensive. But the put vertical that we have in place here has done well for us over the last few weeks. We need to roll that out because we are in the money on that. Interesting, we had a little bit of a downdraft, I guess you could say, yesterday in the marketplace. We recovered a lot of it by the end of the day, but we did have a little bit of a downdraft in the market yesterday, and it pushed our VIX into a nicely profitable position, but it was such a short-term move. It would have been a tough signal to get out to all of you to take action on, but we're going to roll the VIX once again today. We're going to do it just like we did last week, where we're going to maybe add to some of the legs. Increase the insurance protection a little bit, do it at a credit, hopefully, so that we can bring in some additional income on the VIX trade. And then COUP, C-O-U-P, is in the money as well. We do have 8 days left in that trade. This Iron Condor, it expires next Friday, but we need to do an adjustment to this trade to layer into that. We're right now sitting about at break even on that trade. You can see that our open profit and loss is down by about $368. We still got about $300 of extrinsic value sitting out there. So we're at about a break even point on that. But we need to move that. We need to fix that. And so we're going to do both of those right now. Let's start with the VIX position here. I am going to just come into my VIX. I'm going to click on both of those legs. And do a roll. We're going to roll the expiration out 1 week. So we're doing these 1 week at a time right now. So I'm going to roll that out 1 week. And you can see that if I just did that trade right now, just rolled it out 1 week, it would cost me about a 3-cent debit to do that. I'd like to be able to do that at a credit. And so once again, I'm going to highlight the legs that we are rolling out here. Again, here's our current position right here. This is the put spread that we have going on right now. It expires tomorrow, November 22nd. We're now rolling it out to this November 29th expiration date. And all I'm going to do, I'm highlighting those legs, and I'm going to add a few contracts to the quantity here. I went up from 28 to 31. We're really bouncing around here on pricing right now. It's a component of the market moving a little bit, as well as just we're early in the morning. But the mid price is around 80 cents. If we could get that credit right there, that would require me to put up an extra $281 into that trade, and it would roll that trade at a credit. If we look at our positions right now, I do have about $2,800, so that put me around 3,000 or so. It'd be about 1/3 or so of my portfolio in insurance protection, which is where we want to be. I think we want to just keep increasing our insurance protection at this point, with particularly what's happening with the trade wars. The sort of consensus here now is that we got a couple of things going on. We got the phase 1 trade deal that is trying to get done before December 15th, which is when new tariffs go into place. China's been pretty emphatic in saying that they want all of the tariffs removed before they sign anything. And President Trump is saying not only is he not going to remove them, but he's probably going to increase them if they don't sign a deal. So it doesn't sound too optimistic right now. It would be probably prudent to have some insurance protection in place. So I'm going to come back and look at this pricing again. The mid price is all over the place right here. So we might have to work this trade a little bit. I'm going to see what I can get on this pricing wise. I put it in just at the mid price at the time, which was $1.08. It's showing the mid price right now as 80 cents. Let's get rid of this. Let's look at today's pricing. There we go. There's the VIX trade working. So it shows it down around 70 cents. As long as I can get a credit on that, I would be okay with that trade. So let's try 70 cents. That would be $40 on a $260 capital investment. And I'm going to let that sit there for just a second at the 70 cents. Okay, so it took a moment there, but I did let it sit there, and I did get it filled at a 77-cent credit. So once again, we're just taking our current VIX position, which was expiring tomorrow, and we're rolling it out 1 week to the November 29th. And I added 3 contracts to my position. That 3 contracts, I had to come up with another couple $100 to do that, but the rate of return on that was substantial. Makes sense to do that, and we're rolling that trade out for another credit. And as long as you're in the positive, as long as you're able to roll that out at a credit, then you should be fine on the VIX trade. So there's our VIX trade. Again, just rolling it out 1 week. Same strike prices. Everything is the same except we're extending it for a week. And I added a few contracts to that transaction to be able to do that trade at a credit. The other one, of course, that we're looking at here is Coop. And Coop is just playing with that 150 level. If we look at the trade inside of the curve, we can see that we're just outside of those bands of where we want to be. And so, well, let's remove the trade that we're looking at here. Here's the current trade that we're in, and there's the price right now of Coop. That's really where it needs to be. It needs to be about 150.20 or so. Would be our break even. We sold the 150s, of course, but we got some premium that we brought in on that. So we want to layer another Iron Condor on top of our current Iron Condor in order to be able to push this cash flow zone out above it. We also want to alter the risk graph here a little bit. So the way that we're going to do that, we're going to come in on Coop. We're just going to add another trade to it. We're going to use the same expiration that we're currently using, which is these November 29th expiration dates. That's 8 days out. The reason for that, of course, is that on December 2nd, Coop is announcing earnings, and that's really what has been affecting our Coop trade here as of late. Look at a daily chart here on Coop, and you can see this. We've got what is called, what is typically referred to as a run into earnings. And that's what's happening here is there's a big anticipation coming into these earnings trends. We are back up at this top level right here. And so we want to go ahead and layer on top of that. We're going to use the same expiration date. It is the November 29th expiration date. We're going to do a short Iron Condor trade on top of this. And we're going to put our call leg right up here at the 160, 165 level. Now that's a $5 spread. So we would like our put leg to be the same distance. So we're going to come down here to the let's try the 145s and put this at the 140s. So you want to have that same $5 spread that we're doing on the call leg. Now that puts our NAP price at about 55 cents. The mid price is $1.62. There's always a big spread on Coop. And so we'll have to work this a little bit. I'm going to put this in at about $1. We can start at $1.20 and work it down if we have to. But if we look at that trade right there, there's one. I'm going to look at 4. 4 contracts should put me, that's a little bit more than I wanted to look at. Let's look at 3 contracts. I do have, I've got about $5,000 of buying power here still to work with. And this is just a 1 week trade. It's probably closer to where I want to be. That's about a $1,000 trade, which is typically what we want to do in an account this size, position sizing wise. So we'll see what we get on this trade. Mid price is showing $1.57. NAP price is 45 cents. So there's a big spread there. Let's just see what we can get. If I could do that and bring in $300 on a $1,100 investment, that would be a good layering. I got filled at $1.32. So be aggressive. I guess is the word here of the day. Be aggressive on that pricing. If you look at that trade, similar order at $1.32. Let's just look at the numbers on that. You're putting up about $1,100 and you're bringing in almost $400 for a 1 week trade. That's not too shabby, guys. That is not too shabby. And again, what does it do to our risk graph when we look at this? Well, there you go. So we've done a couple of things by layering this additional Iron Condor on top of our existing Iron Condor. Number one, boom, we're back in the profit zone. We're back in the cash flow zone. But in addition to that, see this? This is the big thing. We've really minimized the risk on the upside leg of our positions now. And that's the real key thing here, is just to manage that risk. So it's nice. It's nice that we're back in the cash flow zone here, but this is the big thing. So again, look at your activity here. Here's the coup trade. We are adding another Iron Condor on top of our existing one. Same expiration date as our current one, 8 days out, November 9th. I used 3 contracts. That put me at about an $1,100 investment, which was well within my buying power range. And we are selling the 160s, buying the 165 calls, selling the 145 puts, and buying the 140s. I got it filled. I priced it at $1.20 and got it filled at $1.32. So you might be able to get some pretty solid pricing on that. Those are your 2 adjustments for today, folks. And then just a quick FYI, TLT. TLT hit our buy target range yesterday for, I should say our sell target range for selling a call spread up above it here. I'm going to give that trade to you tomorrow on Friday, just because you got enough trades to put on your plate to work with today, with the VIX trade and with the coup trade. So there's your 2 trades for the day, folks. Have a good trading day. We will talk to you tomorrow.